Were you hearing me saying everything? I was like, I couldn't get my Zoom.
Hearing now.
Oh, good. Okay. And I kept saying, oh Lord, this is good, because it kept doing this spinning thing. And I'm like, where are my students? And I was, okay, I was just talking to my computer. So y'all hear, good morning.
Good morning.
I do it like I'm walking into class. Do you remember what I did when I walked into class? Good morning, sunshines. We're going to, in course content information, I uploaded the capitalized interest, a problem that we're going to work in class today on capitalized interest. Let me bring up, I think this is it. Yep. Good morning, the rest of the sunshine showing up. How are y'all this morning? And for some reason, don't ask me why, I know that we're finishing chapter 10 and chapter 11 is the last chapter, but it just dawned on me that we don't have too much longer together before the end. Don't smile, Nicole, that smile was just like, you're supposed to be sad. I'm not going to see Dr. Boss. But it's coming up pretty quickly. And before the end of class today, I'm pretty sure we'll have some time to go through chapter 11 and discuss what we're going to focus on and what we're going to learn conceptually and not calculation wise. I may cut some things out because I know that the online exams, I personally think are more difficult than mine. I know my exams have this, reputation of being, difficult, but I think after taking online, I think maybe my hair is just wild. Mine may be man, I'll take Bostic's returns exam over online any day. But anyway, we'll talk about chapter 11 because I'm pretty sure that we'll have time to do it with finishing up chapter 10 today with capitalized interest, and going through this problem shouldn't take us long. So go ahead and pull up in course content information. I uploaded a problem that I wrote that I want y'all to work today. How I'm going to do, I'm sorry, I'm going to spit it out this morning. I've been doing polling questions and everything. What we're going to do is I want y'all to work through the first part. We're going to section it off. And instead of me working the problem in Excel, since I did that already on Tuesday, what I want you to do is either do it in Excel or do it by hand, whichever way you think you're going to approach it on the exam. I want you to figure out what is WAAE for the first year. So we'll break it down into sections. So I'm just going to be quiet and I'm going to let you work. Ms. Pham, you sent me an email about your DA5, your data analytics number 5.
Did that?
Did you, I'm trying to remember, I have an email from a student um, about your data analytics number 5 that I didn't grade it because it was, you had emailed it to me because of the problems we had with uploading.
Let me check. I don't remember. I write your email.
Yeah, this would have been like this weekend and or Monday when I didn't. Anyway, I saw the email and I'm going to respond to it. Do you have a grade for data analytics number 5?
Yes, I have. So I
Okay, then it must not be from you. It must be from another student then. That I did see it. I had another number of exams. Um, Also, I know y'all are trying to work and I'm talking. Also, though, important, did you see the announcement that I sent out about how to see your explanations on your assignments that you've already done? I had no idea that y'all, when you went back into your Connect assignments, they were in study mode. And study mode means that you work on, but that you would also get feedback, including explanations. I found out yesterday from a student that says, no, I don't see the explanations. And my mouth just fell out, just a mouth just opened. So, um, the question is, um, it's in course content information, and it's the capitalized interest problem for in class. So I didn't know that when y'all were looking at all of your assignments that you didn't see the explanations of what was wrong, especially for that chapter 9 part 2 one where you've got all those different retail methods. So I was just flabbergasted. I thought y'all were seeing those. So now you know. All right, so I'm going to be quiet. What I want y'all to do, for those that are just coming in, calculate the WAAE for the first year, which I think is 2020. If you need me, just say something. I'm just going through email while y'all are working on that. Multitasking over here. I'm doing okay. I'm gonna go.
We just calculate WAAE for
Right,
each year.
just calculate WAAE up to the, just for the first year so that we can make sure everybody has the same answer and then we'll continue on. So has everybody gotten to that point where you've got WAAE for the first year? Okay, so what do we have? Somebody want to just call out numbers, no judgment. Or tell you what, you want to chat your number to me privately? Would that be, or let's just, come on, we're a class, we know how to do this. Let's just call out a number.
A total.
A total. What is the WAAE for 2020?
1,075,000.
Yep. Taylor, did you get 1,775,000? Nicole, you're looking at yours. You got that number? Yay, give me a smile.
No, I got 1,650,000.
You got 1,650,000. All right, well, we're going to take a look at it. Aaron, how'd you do?
I got the 177.5.
Okay, good. And Ryan?
I actually joined like 4 minutes ago, and I'm kind of confused which problem we're on.
Okay, we're working, if you go into course content information, we are working, I had uploaded a problem that I had, for us to work today.
Okay.
So it's in course content information.
All right. Thanks.
You're welcome. Tanisha, how'd you do?
I got that number.
You got the same number? Good.
Yeah.
Liam? All right, I'm going to go ahead. Liam?
Yeah, I got it.
You got it? Okay, good. I say I wasn't hearing you. I didn't know. So I'm going to go ahead and share screen with you to take a look at the calculation of and I bet y'all aren't seeing anything. Let me share screen. There it is. Why isn't it? Oh, here it is. Fool head. Okay. So can y'all see that okay?
Yeah.
Notice there's a couple of things that I want you to notice. That remember the hints that I gave you to put what is the capitalization period for during each of the years so that you remember, you don't have, I call them brain farts, but you don't have OS moments or brain fart. The 12 months was because it began, construction began on January 1st and then was ending on May 31st or June 1st of the ensuing year. So we had 12 months in 2020, and then you're going to have 5 months in 2021. What are these numbers relevant for? What were the hints that I gave you that they're used for?
The numerator and denominator.
Okay, it's the numerator for which number, Nicole?
For WAAE.
It's the numerator for the interest times time. It's the
Oh, yeah.
denominator, okay? So it's the denominator for the WAAE. So I've got the dates and the amount of the expenditures. This is the number of months during the capitalization period. So obviously January 1st was outstanding the whole time. The 300,000 that I spent on April 1st was outstanding for 9 months, April 1st through December 31st, and then July 1st was 6 months. My calculation here is the 950,000 divided by 12 over 12 for this one. For the April 1st one, it's the 300,000 times 9/12. And then 1.2 million times 6/12. And then sum them up. Okay, so if you didn't get the correct answer, may I ask what you did?
I didn't calculate. I added the months up wrong.
Oh, okay, so something not accounting related, like you put 8 instead of 9.
Yeah.
Okay,
That
gotcha.
was my error too. I had 7 instead of 6.
Oh, okay, yeah. So this is, the finger, counting on the fingers is I do it. And so count on your fingers. All right, so we've got the WAAE. We all agree that the WAAE for 2020 is the correct number. Now go through your decision tree and see how much of it you can remember, and probably, without using the decision tree. Or you do have the decision tree available on an online exam, but reducing time. What do I need to do now? What is the next step? I know we need to calculate capitalized interest for 2020, but what thought process do we need to go to begin our calculations?
What I did, I didn't look at the decision tree or that type of stuff, but
Fine.
I remembered that you do the WAAE times the percentage for a specific debt separately, and then you calculate I don't know what it's called, but the percentage for all the other loans combined.
Right, the weighted average interest rate.
Yeah, and then multiply that by the WAAE to get that interest, and then add them together.
Okay, great. That is a great explanation of the overview of the process. So what is our specific debt?
1.8 million.
Good, 1.8 million. Now, does our WAAE, is it greater than the 1.8 million?
It's less than.
It's less than, good. So what are we going to do to capitalize the interest, to calculate the capitalized interest for 2020? Since my WAAE is less than my specific debt, what am I going to do? So go ahead and calculate capitalized interest for 2020. It shouldn't take long. because the WAE is less than the specific debt. What did you do?
Multiplied it by the interest rate of the specific debt.
Good. And then what did you do about time?
And then
What would be the time on this? What is, I think it was either Taylor or Nicole, sorry, I don't remember which one, that told us that the months so we have 12 months in the year 2020 that are a capitalization period. So would that be the numerator or the denominator for calculating time in your interest? Good. It will be the numerator because the denominator is always what?
12.
12. Good. So it's times 12 over 12 because the capitalization period was for the entire year. So I did some if statements here because I'm an Excel nerd. And so we take the 1775 times the 10% and get 177,500. I multiply it by 1. I put in here so that when I upload this in PDF, you'll know where the 1 came from, that it's 12 divided by 12. And then, so we see that capitalized interest for 2020 is the 177,500. Okay. Now, calculate WAAE for 2021. And let's see how we're doing for handling the second year.
For 2020, do you not have to worry about the other loans?
That's correct. You don't have to worry about the other loans because your weighted average accumulated expenditures was less than your specific debt. You have to worry about it when your WAAE is greater than your specific debt, which is the case in 2021.
Gotcha. Okay, thank you.
You're welcome, Erin. So have we gotten to the WAAE for 2021 yet? And if not, that's fine. I'm just trying to judge the. Hey, does anybody have our weighted average accumulated expenditures for 2021 yet? Are y'all still working or stuck? Or unsure?
I got 1,125,000.
Okay, if the WAAE, if the amount, I'll spit it out. If I spent 2,450,000 in 2020, that was capitalized because every time they, on January 1st of 2020, when they paid the 950,000 to the contractor, they debited, plant, because I think they're building a plant or building or whatever, you want to call that asset. And then for the 300,000 on April 1st, they debited the plant and credited cash. On July 1st, they debited 1.2 million and credited cash. So we know that our plant already has 2,450,000 debited to it. And then for the capitalized interest, when we paid the interest, we capitalized or debited the plant or the plant for 177,500 of it. So remember, for calculating what is my weighted average, what does that second A stand for?
Accumulated.
Accumulated. So this is all what has been capitalized so far. Okay. So let's go ahead and take a look at it. And you can see that you have to remember to bring forward the expenditures that you had in the prior year. If this was more than 2 years, from 1 and 2, I'm not going to give you one that is 3 years because it just takes too long to do. So I brought over the amount that we paid to the contractor plus the amount that we capitalized for interest. Then on February 1st, we spent 1,150,000. Now, how many months do I have how many months of, what is my number of months of my capitalization period for 2021?
5.
5, good. So if I paid the 1.1 million on February 1st, then it was outstanding for 4 months, February, March, April, and May, because we completed it on June 1st. Okay, so does everyone understand where the 4 came from? Yes, no?
Yeah.
And then on April 1st, we have 2 months because it was outstanding for April and May, since June 1st was the day that our plant was put into operations. So the 2.4, this number is column B times 5/5. My denominator is 5 in calculating my WAAE. To have this labeled. For calculating my WAAE, my denominator is 5. Why? Why is the denominator 5 and the numerator is each one of these numbers? I will put,
Because that's the total number of months for the year.
good for, that's the total number of months, total number of months for the capitalization period.
Yeah.
Good. So when I multiply the expenditures times the 5/5, the 5/5, 4/5, 2/5, then when you sum them up, I got 3,747,500. Please make sure that, don't just accept my number, go ahead and make sure that you see what you did wrong. Aaron, I'm assuming that you forgot to bring last year's forward.
Yeah, I didn't do that.
Okay, and once you added those 2 numbers to your number, did you get the correct one?
Yeah.
Okay, so you're good. Alfia, how are you doing? How did you?
That was my same problem. I forgot to add or bring forward the 2 numbers.
Okay, so when you brought it forward, you're good now.
Yeah.
All righty. And Tanisha
I did the same thing.
did the same thing. Forgot to bring forward. But when you add these 2 numbers, did you get the 3,747,500?
Yeah.
All right, Katone, how are you doing?
I did the 2020 expense. I was thinking we do them after. So when he told us to we do it first, I got the right number.
Okay, all right, so you're good. Is there anybody that doesn't understand? Remember, this is our learning environment, not our assessment environment. So if you've got questions on how it was calculated, now please ask. Ms. Pham, how did you do?
I forgot bring the last year. This is
Okay, all right, so it seems like each one is forgetting to bring the last year. Liam,
Yeah, I got it.
you got it? Okay, and Miss Ashley?
I got it right.
Okay, good. And Ryan, how are you doing?
I'm good. I just was confused about the number of months outstanding. Like why
Okay.
it's 5.
Okay, do you understand it now?
Is it because it's going to June?
Right, because our building, the construction was completed
Okay.
on June 1st, then we only have 5 months of capitalization in 2021.
Okay.
So when you calculate your number of months, it's between the date of the payment and the date that the capitalization period ends.
Okay.
Okay? Daniel.
I got it right.
All righty. All right, now what I want you to do, since we all agree now on the 3,747,500 is our weighted average cost of capital, weighted average accumulated expenditures, calculate your capitalized interest. Now, on this one, does our WAAE exceed the specific debt? Yes. So now you're going to have to use the process of the 1.8 million, which is my specific debt, times 10%, which is the interest rate of the specific debt. And then what am I going to do with the excess of the WAAE over the excess over the specific debt? What am I going to do with that amount? Multiply it by what percent? Aaron, you know the answer to this.
Yeah, you have to figure out what the interest rate percentage is for all of them based on multiplying the amount of the loan times the percentage, adding them all up, and then dividing
Okay.
by each
Now,
other.
when you say you've got to calculate the percentage on all of them, let's be careful with the word all. When you're calculating your weighted average interest rate on the other debt, do you include the specific debt?
No.
No. Okay. So that's why I wanted to be careful with the word all. So all of the other outstanding debt. So
Right.
let's calculate your weighted. So calculate your weighted average interest rate on your other debt. Let's agree on that percentage and then calculate capitalized interest for 2021. A lot of calculations for 8 o'clock in the morning. And you round to 3 decimal places. Rounding makes a difference. So what is the weighted average interest rate on my other outstanding debt?
I got 7.769% if you're rounding to 3 decimals.
7.769, yes. 7.769. Those of you still working on it, see if you can come up with that number. If you didn't, in a couple of minutes, we'll review it. I want to give everybody time to try and get it on their own. Okay, you know how that practice is. Lillian, did you just join us? Lillian?
Yeah, like 20 minutes ago.
Oh, sorry. I just seeing you.
That's
in.
okay.
Do you know what do you know what problem we're working on?
I do, yeah, I found it.
Okay, good. I'm sorry about that I haven't called on you. And
No, that's okay.
when I'm sharing, I don't see everybody at one time. I have to scroll up and down. So good morning, sunshine. You missed my good morning, sunshine. Hadn't done it in a
morning.
while. Okay, so the weighted average, I scrolled it up where y'all are seeing what the capitalized interest is, but that's okay. You're going to have to calculate it. Let's look at how we calculated the 7.769. Our other outstanding debt was we had 3 notes at these amounts. Can everybody see where I highlighting and these were the interest rates of each one. So I calculate the annual interest rate, you know, the 7%, the 1 million, the 9% times the 3.5, and then I sum them up so that the total interest for the year on my other outstanding debt is 505,000, and the total principal is 6.5 million. So you can see with my formula, I divided the interest, the total interest, by the total amount of the principal and got 7.769%. Okay. I always like to ask the question that if you didn't get it, if you didn't get the correct answer, why? Because we turn those into learning experiences. So everybody got that 7.769? Okay. So our weighted average interest rate is 7.769%. So now I want you to figure out, you can see what my capitalized interest is for 2021. Let's see if I'm correct. I hope I am. And I'm already doubting myself.
Yeah, that's not what I got.
No, I'm already doubting myself because what did I do? Did I move? Let me redo mine. I'm going to go. Oh, here it is. Here's where I calculated it. Okay. So I had the specific debt by the 10%, which is 180,000. Then the excess is 1,947,500. Is that what you got as the excess? Yes. So that the sum of the 1.8 million and the excess equals the amount of my weighted average interest rate. Then I multiplied. Yeah, this is the correct answer.
Where did you get the 0.42 from?
It's 5/12.
Okay, so you have to multiply that by time too.
Right.
Okay.
Everything's by time. So why is the numerator 5?
Because that's the amount of capitalization period.
Right. So
Half.
good. So remember that capitalization period, as you saw when I started this problem, that was the first thing that I did was put up that so I wouldn't have those OS moments. And so my numerator is 5 and my denominator is 12, which gives me the 0.42. And then I multiply the yearly total, the 331 times the 0.42, and I got 138,044. Is that what you had gotten, Erin, when you said you had gotten a different number? I don't know.
Yeah, I don't remember what number was written next to the 7.769 off the top of my head, but I don't think it was that number.
I don't think it was either. And that's what, because where did I get this number from? D13.
It could be like a rounding thing.
No, oh, I see. I know what I did. Okay, yeah. I just don't know if that, I'm gonna put it Yeah, that's what it was. I was calculating. Okay, I'm good now. All right, so 138,044 is the number that I had up there. I was referencing a cell here and I referenced, I don't know what it did.
How did you get 151,305?
Where did I get this number?
Yeah.
It should be 1,947,500 times 7.769%.
I am getting 1,513,000.
There, if you just think about it, that it can't be that high because it's 7% of 1947. Put in
Oh,
1947.
I know what I did wrong.
Yeah, it's 0.07769 in the calculator.
Yeah, I put 0.7.
Oh, you did 70%. You go, girl. I want that interest rate. I want that interest rate. Okay, so was that Afia? Who was it?
Yeah.
Okay.
Yeah, it was a fair.
All right, so is everybody good on the 138,044? Now's the time to ask your question. And again, the 0.42 is the 5 divided by 12.
Dr. Bostic,
Yes, sir.
how do you find the excess of the WAAE, the 1.9? Yeah.
Okay, so my weighted average accumulated expenditure is that number.
Right.
1.8 million of it I multiplied by the 10%, which was my specific debt.
Okay. I see.
So that is the excess of the WAAE over the specific debt.
Okay. Thank you.
You're welcome. And then, don't forget this multiply by times time. If you got 331,305, then that means that you forgot to multiply by time. I know that you know that interest is a function of time, principal times rate times time, but when you're in the middle of all these calculations, you can forget that times time, but don't, obviously don't. So 138,044,07 is the capitalized interest for 2021. Now, another thing that I did so that you could see and boy, I did this last night and I'm already seeing that I have an error here. Let me insert a couple of rows. So let's look at the journal entry that would be done for the interest expense for the whole year. So the total amount of interest that we would pay for the whole year is we had the interest on the specific debt, which is the which is the 1.8 million. I'm not designing this the way that I would have normally, but that's our, so that's a percent. So we have the 1.8 million times the 10%. So the interest on my specific debt for the whole year, since we borrowed it on January 1st of last year, we would have a whole year's worth of interest. So it would be my 1.8 million times the 10%. and it's 180,000. So the total interest that I would pay on all of my debt would be the 505,000 would be the 505,000 that we calculated as the interest on our other outstanding debt, plus the 180,000, which is the interest on our specific debt. So this company had 4 notes payable that they're paying interest on. The 1.8 million of the specific debt, which was the specific debt, and then the 3 other notes that were the other outstanding debt that we calculated the weighted average interest rate on the other outstanding debt. So the total amount of interest that this company has to pay for the entire year or accrue as interest expense, even if they're not paying it, they would credit interest payable here. So either cash or interest payable would be 685,000. The 180 plus the 505. So the total amount of interest that the company has to pay or accrue as interest payable is 685,000. 138,044.07 is the amount that would be debited to, are they building a warehouse or a plant? A plant, right? So they would debit plant for the 138,044.7, the amount that we capitalized, and then the difference would go into interest expense. Okay. Oh, I see what I was doing. I was calculating, I was doing 2 problems on 1 Excel file. Okay. So that's that problem. Where I asked, determine the amount of interest to be capitalized for both years. We did that. Then, oh, what would be the final amount of the capitalization? I don't even know what problem this is. So what would be the total amount that the plant would be capitalized for? What would be the balance on the balance sheet at December 31st of 2021? So what were my total capitalized contractor payments for 2020? So what was the total amount that I paid the contractor in 2020? The 2,450,000, and then capitalized interest for 2020 was the 177,500, and then the total capitalized contractor payments for 2021 was that number. I didn't sum it up. I'm going to sum it up now. Don't ask me why I wouldn't have. I knew I wasn't going to need it for the ensuing year. So the total amount of contractor payments that we paid in 2021 is the $4,277,500. No, it is not. That is the sum of those. It's not a relevant number, is why I didn't have it. The total contractor payments are just these two, right? That we paid 1,150,000 and 500,000. So the total capitalized contractor payments is equal to the 1,150,000 plus the 500,000. So the total payments is 1,650,000. And you can see that in the problem itself, you know, that I had summed it up by year. So we've got the 1,650,000 that was paid to the contractor in 2021. And then our capitalized interest in 2021 was the 138,044. So the total capitalized cost for the plant was 4,415,544.07. Okay. My total contractor payments, we can see that in the problem itself, where I totaled it by year. Our capitalized interest for the first year, the total contractor payments that we paid in 2021, and then the capitalized interest for 2021. Now, this should be 4 billion because we know plants cost a whole lot more than 4 million to build, but what the numbers are doesn't make any difference in applying them for the problem. Okay, so how are we feeling about capitalized interest and just the many calculations you have to do? But if you get in a pattern, you know, of calculating them and then understanding it so you can answer those concept questions, then we're doing good. I'm going to stop sharing, and I will be uploading this as a PDF file. Into course content information right where the problem is so that you can practice it. I will be putting up some more practice problems like this for you to work. All right, just to give you some good practice, like on the one that I just uploaded, it was January 1st was when we started it in the first year. So I will do a problem where, say it started March 1st and ended of the first year and then ended, you know, May 31st of the second year, so that you don't have, you know, 12 months in any one year. It doesn't complicate it if you remember to put at the top what your capitalization period is, because that is giving you your denominator for calculating your weighted average accumulated expenditures, and then your numerator for calculating time. So it doesn't complicate the problem. It's just giving you practice so that you don't have those OS moments on the denominators and the numerators, because that's where I have seen issues with calculating, is that they will use the denominator of 12 for calculating the WAAE instead of the capitalization period. So I want to give you enough practice at that so you don't have those OS moments, okay? Any questions about capitalized interest? And I'm going to send out a polling question. A couple of them are from the beginning part of chapter 9. They're not all related to capitalized interest, okay? Actually, anyway, so let me go ahead and launch this one. This one's about goodwill. Okay, I've got 8 of 12, 10, 11. That's one more so we can, all right, I'm going to go ahead and close there we go. All right. So let's look at the first one, amortized over the greater of its estimated life or 40 years. Goodwill is an intangible, and intangibles are divided into 2 groups. What are those 2 groups?
Indefinite and
Indefinite, right? So we've got definite and indefinite life. Now, why do we bifurcate, and I like that word, bifurcate, split into 2. Why do we bifurcate the intangibles into definite life and indefinite life?
Isn't it finite life and indefinite life?
Right, goodwill is an indefinite life. That is correct. So what is the difference between an intangible? Why do we divide them into those with a definite life and those with an indefinite life? How do we, accounting wise, handle the 2 differently?
We don't amortize indefinite life.
Good, Ashley. We do not amortize those with an indefinite life. And goodwill is an indefinite life intangible. Now, let me have a little caveat here, a footnote. There is, in GAAP, there is, we affectionately call it baby GAAP. And baby GAAP is GAAP for small companies. And in baby GAAP, which we don't teach because most corporations do not fit the definition of being able to use GAAP for small companies, and I even forget how they define it, but baby GAAP. Under baby GAAP, small companies can amortize goodwill. Don't ask me why, it's more work. So, but in goodwill is considered an indefinite life and therefore is not amortized. The second one, only recorded by the seller of a business. What companies have goodwill on their balance sheet? Or let me phrase it this way. Goodwill is an intangible asset. What kinds of intangible assets are reported on the balance sheet? What type of intangibles are capitalized?
Purchased?
Very good. Only purchased intangibles. Okay, Taylor, good. Only purchased intangibles are capitalized. Any internally generated intangibles are not capitalized. So here we've got, so goodwill only shows up on companies that have purchased goodwill. The seller of a business is the one that is internally generating the goodwill, and therefore it is not on their balance sheet. it's only the purchaser of a business that would have goodwill on their balance sheet, because obviously they have now purchased that intangible, and only purchased intangibles are reported on the balance sheet. So this answer would have been correct if it said only recorded by the purchaser of a business. Now the third one, goodwill is the excess of the fair value of a business over the fair value of all net identifiable assets. And that's the correct answer. I'm going to launch right after this one that we calculate goodwill, okay? But remember, goodwill is the fair value of a business is what I should be paying for the business, the selling price. So how much does the selling price, which is the fair value of the business, how much does it exceed the fair value of the net assets? And we did one of these on Thursday where we calculated it. So go back in your notes and take a look at it. And then none of the answers are correct. C was the correct answer. So one was correct. And that is that it's the excess of the fair value over the fair value of all net identifiable assets. So that is how it is calculated. Oh, I didn't share the results with y'all. That was the results. That's what I thought y'all were looking at. So that's why I went through all four of them, because all four of them had an answer. Okay. All right, let me launch another poll that is about calculating, oh, there we go, calculating goodwill. I'm very limited on words in the question here. So yeah, this one is fine. Some of them you're going to see the full question is not there. So I'll need to read the rest of it, but this one is. Also, these polling questions are a good review too. I like them. All right, I got 3 more. And I'm going to be closing it in about 20 seconds. All right. Now I'm going to share the results, which I didn't on the first. So again, we've got, I don't know if some are just guessing, but we've got, what was the selling price of the business? So
95,000.
Good, 95,000. Now, are we going to compare that 95,000 to the cost of the net assets that are being acquired, or the fair value of the assets that are being acquired?
Fair value.
Good, Nicole, the fair value. Now, what is the fair value of the net assets?
75,000.
Good, 75,000. Ashley, how did you get that number?
I did 90,000 minus 15,000.
Good, 90,000 is the fair value of the assets. We have to subtract the fair value of the liabilities to get net assets. So as Ashley said, our fair value of the net assets is 75,000. How much did we pay?
95.
95,000, which is 20,000 more than the fair value of the net assets. So 20,000 would be the amount of the goodwill. Now I want to take a look at this 23,600 number. The 23,600 is the difference between the selling price and the net assets at cost. Be careful about that, or cost or book value. Be careful about that because goodwill is calculated by the difference between the purchase price, which is the fair value of the company, or should be, you should be paying the fair value of the company, and the fair value of the net assets, not the cost. All right. For those that got the 36 and the 5,000, can you help me? Oh, okay. The 5,000, I guess, would be the difference between the purchase price and the net asset. I mean, the assets themselves. When you purchase a company, you're not only acquiring the assets, you are also assuming the liabilities of the company. So don't forget to calculate net assets, which is assets minus liabilities. Okay? I'm going to go ahead. Right now, it's just going to be poll launching because except for exchanges, I believe we have covered everything in Chapter 10. Are there any problems that you've worked in Chapter 10 and that you have questions on? Or when you did the Chapter 10 Connect, if you got it wrong and don't understand, what you got wrong? Because we'll thumb through Chapter 10, but I'm, pretty sure that we did. Let me launch another polling question that is all related to 10. Let me get this one out. And what is ARO? What is the asset retirement obligation? Okay, that's what it's what you're thinking about. What asset is it related to? What asset? ARO is a result of purchasing what type of asset?
Isn't it long term?
Well, long term, but specifically which one? I'm sorry, I didn't understand you.
Liability.
Right, it is a liability. Okay, so we know it's a liability. And it's a liability that is created because of purchasing what type of asset?
Natural resources.
Good, Tanisha, thank you. Those natural resources. Those natural resources. All right, I got 7 out of 12. So let's, and 9. I'm going to be closing it in about 10 seconds. And, all right. So again, we've got answers on all 4 of them. And the last one is the correct answer. The ARO, what are the 4? Let's do review here. Since we've got time, this will be our review of Chapter 10. What are the 4 costs that are capitalized, the 4 types of cost that are capitalized for natural resources?
Acquisition, exploration, development, and restoration.
Good, Nicole. The acquisition cost, the development cost, the exploration cost, and the restoration cost. Now, out of those 4, which one creates the ARO?
The restoration cost.
Good, the restoration cost, because the restoration costs are going to be paid in the future, but we have to capitalize the cost the day that we purchased it, because the day that we purchased the natural resource, we created a liability. So we have to record that liability. So let's go through the answers since we know that. Does the ARO increase the cost of the natural resource? The related asset is your natural resource. So does restoration costs increase the balance? Come on, this is easy.
Yes.
Yes, because those costs are capitalized. We debit the natural resource and we'll credit the ARO. Now this one, I understand why it may be confusing. Are measured at fair value in the balance sheet. How did we calculate the ARO? How was the ARO calculated?
The present value.
Okay, good. We used present value of probable numbers, right? So we looked at probabilities of the future amounts, that they anticipated that they were going to have to pay, and then we used the present value of it. So that is the fair value of the restoration cost today when they capitalized it. And then we know that they are liabilities associated with the restoration cost. Now, if you were unsure about number B, or measured at fair value, a way with taking multiple choice questions is you should have known that A is true. It does increase the balance of the related asset account. And then you knew that C was correct. So if you know that A and C are correct, then all of these choices above would have to be the answer, and you would just have to accept that, well, if A and C are true and I don't have a choice of A and C, then it must be D. And I didn't know it was measured at, that's what it was being done, measured at fair value when I calculated the probabilities and then the present value of it. So D is the correct answer. Okay. Now, what I'm going to do now as a continued review, the question was too long for me to put into a polling question because I have very limited space. So let me pull up a Word document. Am I sharing my screen right now?
Nope.
Okay, good. I didn't want to be because I want to pull up. Okay, I'm going to, oh, never mind. I thought it was an ARO one, but it's a capitalized interest one that where you were calculating the ARO. I will have I will upload some practice problems on calculating the ARO. You had exercise 10.7, that only one in the book that we already worked. That's the only one in the book. So I will write one. You know, I have practice problems that for y'all for the exam, I will be uploading some practice problems. But I am going to send out another polling question about non-interest bearing note. Now, this is one where I ran out of room. As you can see, what amount will, well, the question is, what amount will be capitalized for the equipment? Look, I was trying to find so much space that the name of the company was long, so I just called it LNB. And LNB is just my initials. You know, I was trying everything I could to get reduced space. But anyway, so the question is, what amount will be capitalized for equipment? Okay, so I've got 4 out of 12. I know it's some calculations. So don't guess. I'm going to give you time to work it. So please don't guess. This is time for you to assess. All right, I know some of y'all are going to start guessing.
What is the ending?
Pardon? The
The
question,
last part, yeah.
yeah, the last part is what amount will be capitalized for the equipment? So what amount will be capitalized for the equipment? So what would be the capitalized cost of the equipment? Okay, I'm going to go ahead and start. I've got one more to answer. All right, so I'm going to go ahead and end the poll and we'll share the results. So those are the results. Now what I'm going to do now is I'm going to share my screen so you can see how how the correct number was calculated. Okay, so let me pull up. I know this is not the one that I wanted, but oh shit, here we go. All right, and okay, 769, 523. Oh, sorry, the explanation of it when I was copying and pasting these from the test bank, I didn't do it. So let's work it together. What do I have to do when I have a non-interest bearing note? What do we have to do in order to, what do I have to do with the non-interest bearing note?
Find
Okay.
present value.
Find present
Okay,
value.
great. Find the present value. So N is what? How long was this note? What was the life?
1 year.
1 year. So 1 is N. What is the interest rate?
5%.
5 is the I. Present value is what I am looking for. Now, are they going to be making any payments during the year? Pardon me? So are we?
No payments.
No payment. So we're going to have 0 as my payment, and then we're going to pay $640,000 at the end of the year. So that is my future value. So then I compute the present value, and we got, what number did you get as the present value?
609,523.
Right, so we got the 609,523. But in addition to the non-interest bearing note, what else did I give up?
$160,000 in cash.
Right, 160,000 in cash. So I have to add the 160,000, and that is the reason that B is the correct answer. Remember that the present value of everything that you give up is the amount that's going to be capitalized. Now, I'm still sharing my screen because let's look at what the journal entry would be for. So on July 1st of 2021, this is, I'm gonna do it below because it's hard when you're doing it on the side. So on July 1st of 2021, I would debit equipment for the $769,523. I'm gonna leave some room here. I would credit cash for how much? Let's piece this together with what we know. I would credit cash for how much?
160,000.
Good, 160,000. I'm not doing this in Excel, obviously it's Word, so 160,000. Then we also have a note, and this is double spacing because, so how much would I credit my note payable for?
640.
Good. The face value of the note is what you credit the notes payable for. Now, my journal entry, pardon me? Can you see? So my journal entry isn't balancing, and I need another debit. And what would that debit be to, and for how much?
Discount on notes payable.
Nice job. Discount on notes payable. And it is for the difference between the face value of the note, which is 640,000, and the present value, which was the 609,523. So I would debit the discount on notes payable for the 30,477. Again, that number is the face value of the note, the 640,000, minus the present value, which was 609,523. Now, conceptually, explain to me, what is that discount on notes payable? You know, one, what type of account is it? Does everybody have this journal entry? Or take a picture of the whole problem? Let me reduce it so you can see the whole problem and then the answer and the journal entry. So if you want to take a picture of the screen so that you've got this problem. Is everybody good? Okay, I'm gonna stop sharing, assuming that you copied it. All right, so we saw that there was a debit to a discount on notes payable. Number one, what kind of an account is it?
Contra liability.
Liability.
A contra liability. Good job. Now, how do we calculate the carrying value of that note? How do we calculate the carrying value of the note? Go back to your notes on from Tuesday. How do we calculate the carrying value?
Present value minus interest expense.
No, we use the carrying value for calculating interest expense, but the carrying value is what? The note payable, which has the face value of the note in it, it's a liability, minus the discount on note payable equals the carrying value of the note. Remember, can y'all see this okay? I can put another light on the matter. I don't know if that helps. But note payable, we know is the face value of the note. And then we have the discount on notes payable, which is a contra liability account. And when we subtract the two, it's the carrying value. And the carrying value is what is reported on the balance sheet, but it is also used to calculate interest expense. Okay, it is also used to calculate interest expense. Right? So you take your liability account, notes payable, you subtract your contra liability account, your discount on notes payable, and you end up with the carrying value. Now, the discount on notes payable is a contra liability account. And what is going to happen to that discount on notes payable account over the life of the note? At the end of the note, you know, say the note was 3 years. I know this one was just 1 year that we just did, but say the note was 3 years. What are we going to do over those 3 years with the discount on notes payable account?
It becomes interest expense.
Exactly, Nicole. It becomes interest expense over the life of the note. It becomes interest expense over the life of the note. So the balance of my discount on notes payable account at the end of the life of the note is going to have a zero balance because we're going to be debiting interest expense and crediting the discount on notes payable every year when we calculate what interest expense should be. We do not have interest payable on non-interest bearing notes. We only have interest payable on interest bearing notes. Okay, so I see y'all need some practice on some non-interest bearing notes. Again, I'll be making problems up, but don't forget, all this time you've got the end of the chapter exercises and problems. Okay, so be working those, and I'm going to be putting together some practice problems and getting ready for the final exam. Okay, so here we've identified an area that you need to practice on those notes receivable. I don't think, oh, here's one that I don't think will take you long to answer. Here's one on, okay, and this one didn't fit also. And so the question is, what amount would be capitalized for the land? So what amount would be capitalized for the land? That last sentence says property taxes paid were $3,000, of which 250 was for the period after the purchase. So the PUR is where it stopped, and I kept trying to find ways to shorten it, was for the period after the purchase. And then the question is, what amount would be capitalized for the land? So again, some review questions for chapter 10. I'm going to give you about 30 more seconds because I do want to have some time to talk about chapter 11. So I'm going to end the poll and we will work this problem right now because I got everybody answered. All right, so let's take a look. They purchased land, and obviously from the information on the question that it had an old building on it that they demolished. So obviously they wanted to purchase the land just for the land. So we know that the 350,000 would be capitalized. Then it demolished the old building. Would that be expensed or capitalized? The 12,000 for demolishing the old building.
Capitalized.
Good, capitalized, because remember, to get the asset ready for its intended use, the intended use was, I just wanted the land. So we will capitalize the 12,000. Now, from the scraps, from demolishing the building, we were able to sell scrap for 1,500. Is that revenue, or does it reduce the cost of my land?
Reduces the cost of land.
It reduces the cost of the land. It's not revenue. So I would subtract the 1,500. Now the title insurance, capitalized or expense?
Capitalized.
But capitalized. What about the attorney fees?
Capitalized.
Capitalized. Now the property taxes. You paid $3,000 for the property taxes, of which 250 was for the period after the purchase. So that means that, let me do the math in my head, 2,750 was for delinquent taxes. What do we do with delinquent taxes? Do we capitalize them or do we expense them?
Capitalized.
Good, we capitalize. Now that 250 would be expensed. Why? Why would the 250 be expensed?
It was paid after the purchase.
Well, it wasn't that it was necessarily, it was paid during the closing. So but it was for the period after the purchase. In other words, it was for property taxes while I owned the property. Okay, so we would add the 3,000, subtract the 250 because it would be expense, and 364,650 is the correct answer. All right, those of you that answered the 366,150, is that there's a $1,500 difference, is you didn't subtract the 1,500. When we sell scraps, it reduces the cost of the property, of the land. It doesn't become revenue. Okay, so the polling questions were a good chapter 10 review, not a total review, but just jogging your memory from what we did on Tuesday in chapter 10. I will also be uploading the topical coverage for the final exam also, okay? Now in chapter 11, if you look on the first page of chapter 11, it gives you all of the learning objectives. And the concept of cost allocation. Cost allocation is we've got these long-term assets and we want to allocate the cost over the period of time that it's going to be reducing revenue, that it's going to be used to produce revenue, okay? So we're using this equipment or the building or whatever the long-term asset is to produce revenue. So we want to allocate the cost of the asset over the period that it is generating revenue. For tangible assets, we call it depreciation. For intangible, definite life assets, we call it amortization. For natural resources, we call it depletion, okay, cost allocation. There are several methods for calculating cost allocation. And in the textbook, you've got straight line, you've got units of activity or units of production, and then you also have an accelerated method, declining balance. The only two methods that we will use are straight line and the activity base, the units of production one. The sum of the year's digits, if they even talk about it, we will not. And the declining balance one, we will not. Okay. On page 587, there is IFRS, Global Green IFRS, of how we handle long-term assets in IFRS. Read that. You will see that under IFRS, companies are allowed to revalue their long-term assets to fair value. We cannot do that in the US. Understand the concepts, and you can see on page 587 and 588 that they show you the calculations of how companies that are using IFRS would revalue their long-term assets to fair value. And you can see the calculations on this. Usually the calculations of how to calculate and revalue assets is on the exam. However, on this final exam, yes, if you have a class at 10, I understand, got to go because I'm about to finalize it. But that is one of the main things that I am going to be excluding from chapter 11 because of online. You will have to understand the concepts of revaluation, but you will not have to do the calculations. Okay. If there's a connect problem where where you have to do the revaluation calculation, I did those connect problems in the beginning of the semester. You can attempt it if you want, or just guess at an answer, and I will go back and give everybody credit back for if there's a connect problem on calculating revaluation. Okay, so I wanted to make sure that you understand that that part is going to be excluded. Then we're going to get into disposal of assets. What are the journal entries in the process for selling long-term assets, retiring long-term assets, and exchanging long-term assets? You will have to know the concepts and the calculations on those. Look for things that I'm going to be uploading in course content information, but between tomorrow, I've got Student Research Day online, and I'm on that committee all day long. So I've got Student Research Day tomorrow, but over the weekend, be looking at what I am putting out on course content, in course content information, including the topical coverage. Okay?
Sounds good.
All righty. I think y'all need to get out and get some exercise. Y'all's energy level is low, and I know for me that this staying indoors and not going out is making me lazier. Are y'all finding that also? And I think that that's a pretty normal thing. Not I think, it is a pretty normal thing. So get out, get some exercise, walk, and get those brains going again. And I know what I've started doing is trying to walk a little bit. So do that and get engaged, okay? See y'all on, and the evaluations for me, please complete the professor evaluations, and then send me, your certificate of completion, because I will take that into consideration for this participation extra credit in the class. Okay, so please complete it and thoughtfully complete it. Okay.
Do you want us to send you and forward the email or take a screenshot of it?
It just, you can forward the email to me where it says thank you for completing it. So just forward that email to me.
Okay, thank you.
I'm keeping track of it. All righty, thank you. See y'all on Thursday, and don't forget to beam in on emails if you've got questions. Okay, see y'all Tuesday.
Okay.
Bye-bye. Bye-bye.